Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Good morning, Will. Happy Tuesday to you. I hope you had a good
Happy Tuesday.
President's Day.
Yep. It is pretty nice. Although I'll be honest, I didn't realize it was President's Day until like 3 or 4 o'clock in the afternoon. So I was like, oh, it's a holiday today, I guess.
Well, and same thing for us. We don't get it off at the University of Missouri, and I don't think Ohio State did either. We still had to come in and lived a normal day. I actually had a pretty busy day for it being President's Day. I had a lot of companies come in that are partnering with me in different capacities. They all had the day off and from their like normal day, and so it was an opportunity for them to come to campus and visit with me. So I guess you could say they still worked, but it was actually a pretty busy day, even though it was a national holiday. So.
Which, busyness makes the day go by faster. Although I do wish I could be outside more right now. It's about 50 degrees and sunny here in central Ohio. So
Sure.
that's why I
Yeah.
got the golf shirt on.
Yep. Absolutely.
So hopefully markets are just as sunny. What's been the rundown for the past week there?
Yeah, absolutely. So old crop March corn down 9 cents to 6.77. December corn down 2 cents to 5.94. Old crop soybeans up 3 cents to 15.40. New crop soybeans up 12 cents to 13.96. That soybean oil complex traded almost 2 cents higher on the week to just under 62 cents per pound. Soybean meal came down from near record highs, $5, almost $5.50 per short ton to trade right around $495 per short ton. Old crop wheat down 31 cents to 7.57. New crop wheat down 29 cents to 7.72. And then that West Texas Intermediate crude oil for April down $3 per barrel to just above $76 per barrel.
So a lot of smaller adjustments there, potentially not too drastic on the week. But what's really been, I guess, either holding the market steady or causing some of those slight changes?
Yeah, and I should probably preface this. The markets were relatively quiet this morning, maybe outside of soybeans, but everything else was relatively quiet coming out of a 3-day weekend. That is a little bit abnormal this time of year, but certainly quieter than we would anticipate. A couple of highlights from last week. The National Oilseed Processors Association reported that their members crushed 179 million bushels of soybeans in January. That was up from December, but down from last January and the trade expectation of 181.7 million bushels. I'll just go ahead out here on a limb and say that for some of those trade expectations, there was a couple really high expectations that I can't think kind of brought that average up. So the trade was shocked by it at first, but I think kind of settled in after looking a little bit more into it. Stocks for crude oil, gasoline, and ethanol increased week over week. Ethanol production used roughly 100 million bushels of corn last week on slightly increased production. Weaker gasoline use on the week might signal headwinds for ethanol demand moving forward. Ag export sales last week were a little bearish. Corn is still not seeing high enough volumes to ease concerns of more cuts. Soybeans are seasonally moving lower as Brazil's production hits the market, and wheat sales were just okay on the week. Grain export inspections, which were delayed today this week due to the presidential holiday or the President's Day holiday, grain export inspections this morning were down across the board, but relatively soft for corn, and then a relative being against the seasonal average for this time of year, and then seasonally strong actually for soybeans. We continue to see a little bit higher than what we would anticipate soybean exports for this time of year.
Yeah, and those exports going to be interesting to watch as the soybean window is kind of coming to its end there, seeing how that kind of tapers out. But today we're really going to be talking about 2023 supply and demand, and starting the conversation with acreage. I know domestically acreage, it's been interesting to watch the last couple of years as we've seen these elevated prices. Maybe not as much acreage online as some might have thought with those elevated prices. But Ben, where do you really see acreage coming into play? How do you see it coming into play in 2023?
Absolutely. So, this is where we start with looking at the total pie in terms of how many total acres do we think are potentially going to be out there. There's two areas of major question marks for me at the moment. We have quite a few conservation reserve acres that are set to expire or are coming to the end of their contract. Traditionally, what we have seen is in periods of high prices, high revenues, those acres come out of CRP and get turned back into row crops, if you will, or other intended uses. I'm a little bit more curious to see how that works this year, because we certainly have seen, dollars that are being allocated in programs that continue to provide a little bit more incentive for those acres to remain in CRP, or just, other set aside programs in general. But then we also have, the elevated risk of, relatively high input prices. We're at least anticipating higher input prices this year than we did last year, largely because some of those inputs just hadn't increased by the time producers were or as increased as much when they were buying inputs all the way back in the fall of 2021. That's a little bit different this year, even though we've seen some cost categories come down as of late. Still higher total cost year over year. So I think the higher cost plus, maybe some softening in the grain and oilseed markets, maybe keep some of those acres out of row crops and back into conservation reserve. So the total pie maybe a little bit, pretty similar to what we've been seeing in the last couple of years, right around 316, 317 million acres of intended uses. Just real quick, and I know I'm dragging this on here real quick. Then we start looking at relative costs and relative returns across the board. Corn competes very favorably right now in the current new crop markets. If we start and look at corn to soybeans, the market right there is trading right around 2.3 soybean to corn ratio. That is kind of my benchmark of where we start seeing more corn acres for some of those marginal or fringe crops that aren't just a strictly crop rotation. And then on the corn to cotton ratio, so for our southern states, that ratio continues to favor more corn acres and has substantially been above that mark for a long period of time here, or pretty much since the new crop began early last fall. So I look at this and say I am intending to see more corn acres coming into the balance sheet as we look ahead.
Well, and that's been a big topic of conversation the last year plus too, because you see all these elevated prices really across the board. You see soybeans well above $14. You see those elevated corn prices, and you're trying to figure out exactly how that's going to play out in the acreage battle. But like you said, corn still remains to be king in a lot of these situations. But do you see any splits between the eastern and western corn belts on how those acreage battles might go?
Good question. So I think this really comes down to a weather forecast, which, as you know, I'm an economist. I try to stay out of the weather, but it certainly impacts a lot of these forecasts as we look ahead. The weather pattern that's starting to develop, at least for some of the weather forecasts that I follow, certainly suggests that we're in for a more favorable growing season this year than what we've experienced the last 2 years, especially in the Western Corn Belt. So maybe we start to break out of some of this drought. It's going to take a lot of moisture to get us out of those drought stages and improve soil moisture conditions. But I preface this with, we seem to be having a channel, and now I'm using weather terms that I don't normally use, because I follow a channel for me in grain markets means different, very different. But there is a weather channel that is building right across Missouri, up into Illinois, Indiana, and Ohio. Okay, so why is that important? Well, that's the track that storms are going to follow. That was a very similar track that we saw in 2019, very similar track that we saw in 2013, that led to some very wet conditions at planting time and increased prevent plant. I'm not projecting that we have, as bad of a season as what we did during those years, but I certainly would suggest that if we can get some moisture to help out the Western Corn Belt, that probably comes at a little bit of a planting struggle in the Eastern Corn Belt as we look ahead. So maybe a few more soybean acres in the east, and more corn in the west, relatively speaking.
So hopefully also too, talking about the increased moisture, hopefully in the Western Corn Belt, see some better yields and outcomes there. But really, how does that lead into where we're sitting right now with the old crop demand? Like we kind of mentioned earlier, that soybean window is coming to a close, the corn window is still open. So on the demand side of the picture, what are we looking at right now in the end of February?
Yeah, so for that old crop, so this would amount to new crop carryover. This becomes the beginning stocks for next year. I'll just start with corn for a second here. I'm about 10 million bushels, still softer than USDA currently on ethanol demand for old crop corn. They came very close to me. They reduced ethanol or corn use for ethanol 25 million bushels in February. I was right around 26. I still think we'll probably end up a little bit softer than that at the end of the day. So I'm down 10 million bushels there, which increases ending stocks 10 million bushels. However, I'm 25 million bushels higher on feed and residual use. Part of that is just competition for feed grains in the Western Corn Belt. I think we have the potential to see a little bit higher feed demand this spring to the tune of 25 million bushels. So again, that's an increase now. So just the two domestic categories, ethanol and feed, that's an increase of 15 million bushels in that category. But then it comes down to the exports, and I'm still 125 million bushels soft on exports relatively to where USDA is. That includes a bunch of things in terms of where I think we'll see demand pick up around the world. Competition from international markets, Brazil being a big key here for their crop that's just now being planted, right? So there's a lot of unknowns here still left to go, but all said and done, I'm about 130 million bushels higher on ending stocks for our old crop marketing year, which then translates to 130 million more bushels in new crop corn supply for next year.
Well, and if that kind of comes into fruition there, do you see kind of the current market still being able to stay elevated where it's at, or do you see some of that tracking back downward as we kind of move throughout the growing season?
Yeah, so I anticipate my forecast, and again, this has just been Brown's forecast. Please don't blame the University of Missouri for anything I might get wrong here, but certainly I recognize the tie. If I could summarize all this up, is I do continue to see a divergence between old crop and new crop corn. I think the old crop corn market, we're going to see basis bids remain elevated as locations work to source grain. There's going to be pressure right now for that old crop market, but I do intend to see that pressure on that new crop corn price start to fall. That is kind of my expectation, that the carry widens between old crop and new crop corn as we move through the spring. So the cash prices are going to remain relatively the same. That's kind of my takeaways. Farmers looking at old crop cash prices relatively the same. However, I think it's that new crop futures price that we'll start seeing drift lower here over the next couple of weeks. Let me converse that with soybeans for just a second. If I'm correct, big if there, but if I'm correct on my acreage assessments, this keeps the U.S. soybean balance sheet very tight. And I think we maybe even see new crop soybean prices maintaining some of their current levels as we move through the spring. So the picture remains tight on the soybean side. Corn maybe gets a little bit of relief on a stronger U.S. corn crop.
It always keeps things interesting. You think a tighter picture means potentially more volatility and more interesting things could happen down the line. So another thing to just keep in mind to viewers and listeners, as you think about those future prices, it's not necessarily the expected price, at that date. It's more of an expectation of demand, what's needed by the market kind of there. Is that a good way to think about that, Ben?
Yeah, it is, right? So this is always kind of the big battle. It's the market telling us when they need supply for the product in a lot of those cases. But I do think we are seeing right now a little bit of a difference in terms of demand and I'm just going to call it, total available supplies between old crop and new crop. The expectation, I think, is going to start turning that we are going to have increased acres of corn, a solid corn yield, and potentially bigger carryout into next year, and that's going to weigh on those future crops, those future corn contracts as we look to 2023.
Yeah, well, I'm looking forward to seeing what USDA sentiments are when they come out with their next supply and demand report coming up pretty quickly. And I guess on that, Ben, what reports, what things should farmers and ranchers be really paying attention to the rest of this shortened trading week?
Yeah, well, and related to your last statement, we're not going to have to wait long on USDA's, kind of a next move here, if you will. So this week is the Ag Outlook Forum in DC. This is where USDA presents, their first, outlook. It's a long-term outlook in terms of supply and demand, but it's really their first iteration of new crop supplies. The target that the market watches very heavily is those corn and soybean US acres. And so we'll get those numbers here this week. And then we've got a couple other unique things. Cattle on feed for our livestock friends comes out this Friday. We also get USDA's estimates for county level 2022 corn and soybean yields. This probably doesn't impact the market all that much, but it certainly kind of gives us an indicator of where we could see potential ARD county payments triggered across the country for last year. So all those on tap for this week.
All right. So viewers, listeners, like Ben teased there, if you'd like to learn more about what we do or our sister program, the weekly livestock market update, you can do so at brownfieldaagnews.com. Ben, it's always a pleasure having you on here with me. I'm Will Robinson for Brownfield.